Today we're going to have our weekly strategy roundtable where we talk about current market conditions. We're going to talk about earnings. We're going to talk about oil prices, the war in the Middle East, new Fed chair, and what to expect next. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. I always want to welcome new subscribers. I'm going to spend the next 30 minutes going over the content. And then open up the floor for questions. But again, welcome. And my background is technology. So I was executive vice president, head of technology at Options Express from 1999 through 2007. Options Express went public. I worked at several startups here in Chicago. After that, hedge funds. So that's my background. After Options Express went public, I decided I'm going to manage my own money, do it myself. I've been doing that for 20 years, and build technology to provide signals, to provide signals based on AI to help you trade, and started TradeSpoon and Yellow Tunnel back in 2012. So it's been 14 years. And about 2 years ago, Keith Harwood has joined me. His background is in market making, and he worked for hedge funds. He has deep knowledge in futures, options, trading, and we build new programs and new models that can help us trade. And we have live training room every day. So that's our background. Disclosures are very important. Please read them. If this is the first time you see this disclosure, I encourage you to visit optionscreen.com to understand the risk associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. Right. Before we jump into trading psychology, let's talk about current market conditions. So let's look at the 1 week chart, right? And let's look at the interest rates, right? And please type any questions you have. Rodney, welcome back. Type inside of the questions to make sure I can answer them. But you can see 10-year yield pull back from the 4.5 level at the peak of the escalation in the Middle East. After last Friday, last week, we got to 422 on the de-escalation news that there will be an agreement. And right now, as the new Fed chair, Warsh gets, press conference, get questions by senators, you can see, or by the committee, you can see rates are back to 430. 430 has been an important line. We talked about this. That goes back to the previous bear market in 22. That was the peak of the bear market in 22. And basically, since the end of 22, interest rates, 10-year yield is exactly the same level, right, that it was 4 years ago. Anything above considered to be inflationary and stagflation, and market pulls back. Anything below that, market continues to rally. So that's 10-year yield. It's not at 4%. So that would be the argument that maybe now that the market did make new highs, it makes sense that the market short-term is overbought and will consolidate until the new Fed chair comes in place, and it's kind of a little bit more clarity in terms of number of rate cuts and when are these rate cuts going to happen, right? But ideally, for the market to continue strong momentum to the upside, we need rates to be closer to 4% than 4.30. Dollar did pull back. We're not that far away from the recent lows of the highs, so that's positive. High yield continues to recover, almost at multi-year high, so that's positive. The spread between the treasuries and junk bonds continue to narrow. That's positive as well. And VIX pulled back. Now at 20, we were at 18 handle, even 17 handle this week. But market is pulling back right now from the all-time highs, and we're up about 7%, so slightly above. 20 considered to be neutral, where it's not elevated, but kind of a historical average. Value stocks almost at all-time high, they're lagging. QQQ broke out, made new highs above 640 and staying above 640 last week and this week. So that's positive. Semiconductors continue to break out on better than expected earnings, and also the investment news from Amazon today and yesterday, and from Marvell and Micron. So a lot of investment into semiconductors, building out data centers and building out the infrastructure to run large language models. Spiders also break out and made new highs, broke out finally from the 700 level. We've been at 700 level since October, kind of not going anywhere, and finally there is a breakout, sustainable breakout for a couple of days, so you have to recognize. And also small caps continue to also grind higher, made new highs, and broadening of the market participation is also a welcome sign that at least short term we made new highs and probably will consolidate for the next couple of weeks. Gold miners pulling back today. We have gold pulling back today, silver still kind of a weak rebound from the recent highs, underperforming. Copper at all-time highs, companies like FCX. And crude oil continues, pull back from recent highs, but still not at the level of when the war started, right? Crude oil was at 75, we're at 90 right now, and Brent was maybe 80, 84, and now it's back to 100 level. So elevated crude oil, inflationary pressures, interest rates at 10%, and I think the 2-week ceasefire is coming to an end tomorrow, right? So the question is, will they extend the ceasefire by another couple of weeks, or will they start bombing Iran, right? So escalation, de-escalation, or just kind of no reaction. So market participants are preparing for that, right? People are hedging and taking some profits. Any questions so far? Any questions? If you have them, that'll be great. Okay, so the question is, what do you expect the market to go, right? If you look at our, let's see, close these screens. If you look at some of the models, right, like Profit Accelerator, Aggressive Power Trader is our main model, optimized for short-term predictions. Basically, today it sees Delta Airline in the uptrend, Delta Airline, Goldman Sachs, PVH, some of the companies that are flat. Model runs every day, right? This model runs every day and provides signals. With some of them I trade, some of them I don't. And you can see for spiders, it does see that in the next couple of months we have a sustainable breakout and potentially reaching 750, 760 level on S&P in the next 3 months. But short term, it doesn't see a lot of momentum beyond 700, 710 level. If you look at the 10-day prediction, it does see that the upward momentum continues. Right, for today, it's supported 707, overhead resistance 714, and we're trading at 706. So based on the medium-term and long-term predictions, we see that the market is overbought. But long-term trend is intact, and potentially, we could reach 760, either by July or by December, depending on midterm elections and the new Fed chair. So that's Aggressive Power Trader, right? And then if you look at the positioning data, right? If you look at the positioning data for SPX, the majority of the contracts are trading. You can see short term is strong uptrend, medium term is strong uptrend, long term average. So we definitely have an uptrend intact. And then if you look at the gamma exposure, the main support level, let's see, gamma exposure. Uh, 6,900, right? So right at that 7,000 level. So the gamma exposure at 6,900 and 7,000, what used to be a main overhead resistance, is now support, right? And you can see people already building positions at 7,200. So that could act as a kind of guidelines for what can happen between now and May, right? So if I select May expiration, and I will select June expiration because this is where majority of the contracts, this is what majority of the people are trading, May and June contracts. You can see there are about 40 billion, 45 billion in May, and in June, $70 billion worth of contracts. So 7,000 is well supported, and potentially by May, right, by May, June, we could get to the 7,300, 7,400. Our model calls for 75, 7,600 by July, but first thing first, those are different possible outcomes. So one is one possible outcome is that we can get above these levels. Right, so scenario number one, we get to 7,300 and above and better than expected earnings, new Fed chair that will lean toward cutting rates, and we could get scenario number one, right, 7,300 or above. Scenario number two, we're just trading in the range somewhere between 6,800, 6,900. This is where the market has been supported, right, by positive gamma exposure and positioning. So we're trading somewhere between 6,800 and 7,300. Right, that's scenario number two. And scenario number three, either escalation in the Middle East or tech stocks are over investing in AI and do not justify the investment based on the revenue, right? And you have negative reaction to the earnings, right? And you have scenario number three. So those are the three scenarios. How many of you think scenario number one, we're going to reach new highs again and probably get to somewhere between 7,300 and 7,400 or 7,500 by May, right, at the end of the earnings season? How many of you say, no, we're going to just trade in this range between 7,300 and 6,800? And how many of you say, no, we're going to revisit the lows, recent lows, scenario number three? BJ, welcome back. Rodney, Alan, Alex. What do you guys think? Scenario number one, we're going to 7,300, 7,400. Scenario number two, we're trading in the range between 6,800 and 7,300. And scenario number three, 6,700. Starting set of question, BJ too. Okay, I'm going to go with two as well. I think incrementally we'll make new highs. I don't think we're just going to get to the 7,500. I doubt we're going to get to 7,300 by May, right? By May expiration. But it's reasonable to assume that at least to 7,200. On good news, and still there is a lot of uncertainty about Middle East. We're almost at the end of April. If at end of if we're approaching end of May and we're still kind of pushing the deadline further, and Strait of Hormuz is closed and oil prices are at 100, at some point market is going to reverse, right? If that crude oil is at 100 or above, or Brent crude oil is at 100 or above, then you will have started seeing negative effects on the economy. So then you could have scenario 3. I'm going to go with scenario 2, that we're trading, somewhere between 68 positive gamma, right? Positive gamma is at 6,900, so I think this is a good buying zone, 6,800 to 6,900. I think this is a good buy zone. Here, I would consider trimming, right? As we approach in 7,200, 7,300, potentially I would trim your long position and buy on pullbacks. Any questions? All right, so how do we help on yellow tunnel? So we do have aggressive power trader. You can sign up for aggressive power trader. It gives you predictions every day. Dow today, Goldman Sachs, Delta Airline, PVH. The model runs every day. You can find signals from yesterday, right, April 19, or before that. Yesterday was Microsoft. Some of the stocks I trade, some of them I don't. For example of Microsoft, I did trade Microsoft. I have a current position in Microsoft. So that's aggressive power trader. If you want to analyze your own stock, you can, if it's a liquid name, most of the liquid names we have, like Apple or Nvidia, and you can type in analyze, and it will tell you, if the stock is in an uptrend or downtrend, and at what point do you want to consider buying, right? At 267, maybe it's a good buy for Apple, and 273, you want to maybe trim your position, right? So it helps you determine the buy zone and the sell zone. Then it helps you determine the long-term trend, right? And these are very valuable tools to help you optimize your entry and exit points, right? Because the difference between 267 and 273 is 2-3%. So you don't want to consistently overpay for your entry, for your buys, right? And you don't want to cut your, and sell at the bottom as well, right? So this is an important tool that I encourage you to have and participate, to use. We do have live trading room recordings. Every live trading room recording gets recorded. You can see it here. And you also have strategy roundtable recordings that you can use as well. We also have weekly power trader. This model analyzes longer time range, right, and gives you predictions for, gets published every Sunday, right? This gets published every Sunday. The idea is, the signal is valid. Usually I hold these positions for a couple of weeks, maybe even a month. Aggressive power trader, I usually hold for a couple of days, maybe a week, right? Because this model takes longer term view. The goal is to have no more, if you start trading, if you're new to trading, I would encourage you to only start with 4 active positions and maximum loss of 2.5%. So this week we have ADI. I have a position in ADI, BLK, Cisco. I just closed Cisco position actually, Nucor, and UPS, right? So you have different signals get published every week. If you actually want to see what I trade, you can go to Dynamic Power Trader, right? Dynamic Power Trader, we have live trading room every day that I encourage you to participate. You can watch the recordings. We have an opening and closing session every day. And if I trade any of these signals, then you can type in your phone inside of SMS and messages, SMS settings. You will get a text message every time I trade. And you can see all of the orders. Today I'm trying to close Cisco position. I have a call spread. If you're not comfortable trading options, I actually have a stock position that I did trim as well today. Cisco was a good signal. Citigroup, I trimmed Citigroup. Right, Citigroup was a signal last week that I also trimmed. So it's a combination of both stock and option trades that you can find in Dynamic Power Trader. Earnings Power Trader is the next signal. This is more aggressive. I'm trading options, and I'm looking for anywhere from 30 to 100% return in one day using options. So very aggressive trading. I'm either long or short volatility, right, based on my view on the volatility and the signals. And this week we have Intel, we have Texas Instruments, and Google announcing earnings. And one of these stocks, at least one trade a week, I do on Google earnings. At the closing bell, there's a closing bell. Usually every day I do trading as well. I don't do it in this service, but I talk about them. So I encourage you to participate in the closing bell, and there I would do all three of these trades I would do. And finally, if you're not comfortable trading options, then Profit Accelerator. This is where you see stock positions. So those are the services that we offer. I hope you can try one of them. Please join us on the blog. There's every Sunday we send out a blog. So I encourage you to look at the power trading markets. Every week there is a blog with the signal of the week, and then you have different trading psychology concepts or just trading concepts that also can help you navigate market volatility. You can see the recording of all of our live trading room and webinars. And you can always try Stock Forecast Toolbox on TradeSpoon site as well. So those are the services. Any questions so far? So let's just recap today. So retail stocks are almost at all-time high, kind of pulling back today. Metals and miners are pulling back. People are concerned about the energy, right, and the Middle East. Utilities pulled back today, 1.5%. Consumer staples pulled back. Industrials, right, GE of the world. So we're in the middle of the earnings. You have GE earnings. That's down 6%. Triple M down 2%. So industrials are pulling back. Banks also pulling back today, but in an uptrend. Let's see what else we have. Home builders like DHI had earnings today, and that is up 7%. Biotech is one of the strongest sectors. So you do have a consolidation since November, October, and then a strong breakout in biotech names. Biotech is another, list of companies that make sense to add to your basket. Value stocks in general are almost at all-time high, and QQQ are made new highs. Small caps are doing well as well, so that's positive. All right, any questions on some of the model stocks? All right, so the most important, again, to iterate is, if you're ever in the live trade room, I talk about dichotomy of control, right? You want to concentrate on things that are within your control, which is risk management and your goals, right? Goals should be based, in my mind, on compounding investment. Unless you're doing this as a full-time job and you day trading and you want full-time income, right? Then compounding investment may be less important because you're in and out every day, and you're using it as a full-time job. So you can use these signals to day trade, right? In the live trading room, you can participate, ask questions. If you hold a position overnight and this is kind of a part-time income or just supplemental income, compounding investment is very important, right? Set the goals, treat it as a business, set goals week over week, months over months, year over year. If you need help with your trading plan or trading journal, I encourage you to schedule a consultation with Keith. I'm gonna drop that that link. You can schedule a consultation with Keith. Find the time that's convenient for you, and it's free, and he can help you with your trading plan or give you guidelines, right? If you need longer-term commitment, he can schedule, create a custom program for you to trade. But this is something that I would consider. And you're welcome to schedule these consultations. And there's a risk management, again, these positive and negative visualization. The exercise that I did 1, 2, and 3, are we going to 7,400, or we're revisiting recent lows, right? That's important exercise because it can help you determine how much exposure you want to have in your account, right? The idea is not to have more than 10% drawdown. I mean, setting the goals are important, and to grow your portfolio is important, but it's also important to determine how much risk you're willing to take, especially, you know, we just went through a 10% pullback. If you were down more than 10%, if you were down 20%, 30%, right, you want to kind of document that in your trading journal and make conclusions that probably you wanted to be diversified. You don't want to have all your positions in technology or all your positions in small caps or in crypto, right? You want to be diversified, and you want to have 4 positions with 2.5% stop loss. Maybe it makes sense to have, you know, hedge your portfolio, right, where at least one of these positions are a hedge or bearish. But positive and negative visualizations are very important, right, to avoid this fight or flight response and trading on emotions. Talk about cash is important. I would say right now, 20 to 30% of your portfolio still should be in cash in case we do revisit either recent lows or at least 6,800. Portfolio drawdown, right? 4 positions at 2.5% stop loss, and always structure your trade based on high probability of success and versus return on capital, right? Look at the support levels. If you think 6,900, 7,000 will hold, and that's your stop level, and then you want to structure your trade where you have reasonable expectations of how much market can move, right? By May, it's reasonable to assume we can get to 6,200, 6,300, right? So that would be your target gain, right? Your stop loss is 6,900, 7,000, and you structure your trade where you have, you know, certain price patterns, or you look at the options data. We have options webinar on Delta. You can use options data to determine your probability of success and how often you're going to be right. And this is an important concept as well. I'll wait for 2 to 3 days to confirm trend change. Right now, we're established short-term, medium-term, long-term uptrend. It will take not just 1 day, but maybe 3 days of making lower lows and lower highs to at least say that short-term we are consolidating and maybe, you know, the trend is changing, right? Always do same position size, right? Especially when you do options, right? You always want to invest, risk the same amount of money. If you trade in stock, you want to accommodate for beta. Some stocks move a lot more than the others, so you don't want to have same quantity or same dollar amount. You want to adjust for beta. And when you trade options, you want to look at the notional value, right? You want to take the strike price multiplied by contracts and realize that higher strikes are more, you know, 1% move on $400 strike is a lot more than 1% on $40 stock. So you want to adjust your contract size based on, you know, how much equity you have using these derivatives, right? Be long and short the market at the same time with certain bias. I think right now market short term is overbought. Maybe it makes sense to sell calls against some of your stock position where you don't have all of your positions are long, right? Allow more time. Push expiration more forward, right? At this point, we're in May expiration. Maybe it's, you know, in the next 2 weeks, you want to close your May, roll to June, and allow more space, right? Any questions? Martin, welcome. Rodney, BJ, Alan, Alex. All right. In terms of homework, 2 books that I always recommend. One is Thinking Fast, Thinking Slow, right? Daniel Kahneman, Emotional Intelligence, Prospect Theory, very important concept, right? How we make decisions and recognize how you trade based on these 2 systems, right? Sometimes we trade in system 1, fast, intuitive, emotional, which sometimes is great when you have to make short-term, very quick decisions, but sometimes it can get us in trouble, you know, if we overtrade. System 2 is more logical, deliberate, where you keep trading plan, trading journal. So he covers a lot of these concepts. He also covers prospect theory, which is an important concept to understand, right? That our relationship with money is different, right? Our reference point is different, and we treat gains and losses differently, right? And that's why famous saying that you should let your winners run and cut your losers short. But prospect theory tells you the way we wired, we do the opposite, right? We do the opposite because we are risk averse. So understanding risk aversion, prospect theory are important concepts in trading psychology and Yellow Tunnel. You can find more of these concepts on the trading plan, trading discipline, trading concept. So there are a lot of trading psychology concepts that can help you navigate market conditions. Also, if you're interested in auto trading some of these signals like dynamic power trader, CISC, if you're not in front of the computer all day and you just want somebody else to execute the trades, then we do have relationship with Avantgarde. We have a marketing relationship with Avantgarde. I use them in live trading room. I'll also drop this here. You can sign up for Avantgarde. Let's see. And you can actually, they're broker-assisted trade. You can call them. They can help you navigate market volatility. They can help you place the trade. Or if you sign letter of direction, you can actually auto-execute these signals as well. Martin's here. Martin, did you ever get it to work? Okay. So that's I dropped the link inside of the questions where you can also look at if this is something you're interested in. If you fund the account and deposit money, then if you sign up for any of our services, if you haven't done that already, you can sign up and we will give you 3 months free, right? We'll refund the 3 months of your payments of any services you want. So that's that. I'll put it inside of the chat. Any questions? All right, if there are no other questions, then that's all I have for today. Keep an eye, we do have a deadline for the ceasefire. I think it's coming tomorrow. So you can already see markets are taking some profits. Again, I would keep an eye on the gamma fleet. 6,900 is important support level, right? If we drop below 6,880, 6,900, then it opens the door to potentially again retest the lows, just depending on what are the nature of these escalation. But for now, obviously we're at all-time high, and first thing first is the 7,000, where a lot of the positioning, and it's going to take some negative news to break through that level. All right, thank you very much, and have a great day. Thank you for participating. Alan, Alex, VJ, Martin, Rodney, thank you. Take care.